As we convene for this significant event, I'm mindful of the critical juncture we find ourselves in within the global maritime landscape. There are obvious geopolitical challenges, but there are opportunities as well, as is evident by a whole host of deals, mergers, acquisitions which have been rolled out in the region in recent times. The conversations and collaborations that will unfold over the course of this conference will undoubtedly contribute to our collective ability to navigate these complexities with resilience and foresight.
By investing in sustainability-focused projects, financial institutions not only support the global agenda for environmental responsibilities, but also position themselves as a key enablers of positive changes. Collaborative efforts between the financial entities, ports, and shipping communities can unlock a new avenue for funding green projects that for steering and mutual benefits relationships that will bypass the traditional economic boundaries. To conclude, by embracing this collaborative spirit, we not only unlock the new opportunities, but also to build a foundations for resilient global trade ecosystems where trade's growth is matching with the environmental responsibilities.
Today, I'll try to basically go into the little bit to find out a common language between us and ship financiers, because we normally speak a little bit of a different language. And the financial market of shipping is witnessing a great expansion as well as great challenges, including geopolitical challenges. Not the last one of them is, of course, the situation in the Red Sea, where you could see that things are just keep going against shipping. Initially, we started with COVID-19 issues, or before that, even it's the Russian-Ukraine conflict, COVID-19. Now we're going through the Red Sea dilemma, and we don't know when this is going to stop. Again, every challenge, we have a lot of opportunities. And it's seen that ship owners and ship managers are very innovative. And our innovation doesn't just go for operating our ships, but also how we can move around all these different challenges, including financing challenges.
Well, if you talk about financing, trade and shipping, I think there are some fundamental developments that are not just for shipping and financing, or ports for that matter, but are much more broader. First and foremost, everywhere you look, everywhere you go, transparency is the name of the game. Real-time, dynamic entry to information. Knowing what is happening, knowing exactly what the status is. And that has to do with shipping, it has to do with ports, it has to do with financing.
Investors, financiers, lenders, they will always look for a politically stable democratic government, which is also internationally recognized by different bodies and organizations like OECD, FATF, European Union and others. The investors will definitely look in the rule of law in the country of registry. And they will always focus on the existence of a modern and a very adaptable legislation, because they have, first of all, to secure and protect their assets and their interests. Financial institutions today have a more comprehensive picture of vessel operations, and this includes also ESG standards and Poseidon principles. They are increasingly looking in full quality through their own assessment and vetting of their clients. And also they expect from flag states a good service when it comes to information or feedback whenever they need it. Quality of a ship's registry today, and when I say quality, I mean ranking in different bodies around the world. All these quality standards increasingly influences the financial decisions in our industry.
Montfort Maritime Capital, it will be a new feature for the Middle East. It will be the first regulated shipping fund in the Middle East. It doesn't matter whether it's finance, whether it's regulation, alternative fuels, everything that we talk about today is green. So if I was doing a new build ship today, I would look at the optimization of conventional fuel with all the cost saving measures, fuel saving measures that you can put on board, but leave room for that first dry dock, which will be 8 years from now, where you can retrofit the ship.
Invest during volatility. So it's about finding the right balance between investment and keeping the right reserves of cash. Always on the lookout for right opportunities. So the most important thing that we keep in mind is to have a proper due diligence done, see if it fits within our strategy, and then make that investment. And the other thing to keep in mind is always do a post-analysis of our investments. So that's one of the key parts. Geopolitical tensions, again, this is another thing, right? A challenge, whether to go into markets where there are geopolitical tensions. Governmental support, government-to-government support is one of the key factors that will help us to kind of maneuver this particular situation. I again talked about acquisitions fitting with our strategy. And then take an informed decision on which markets, which companies that you would invest in. And then finally, of course, the availability of funding to support the growth, right? So it's important to have a balance of long-term funding and short-term funding available with you. So in this volatile market, if you don't have access to quick funding, very difficult to seize opportunities. So as Ediports, we have a kind of an RCF facility which helps us to go and invest into quick wins, and then later on convert that into long-term bonds or bank syndicated finances, things like that.
So we have seen a huge amount of Asian-based banks wanting to do ship finance, but they can't because they don't have the access to the owners who are, let's call it, whether they're in Athens or in the US. Here they can simply connect and look at the deal that's been done, or join with another bank that has already done a deal already and take a participation in that transaction. The other bit about the platform is really about preferences. So a Middle Eastern bank may just want to do Middle Eastern deals, fine. Then ultimately the transaction, just click a button to say only Middle Eastern deals only, for non-UAE flag, or however you want to position your preference, and then you get the confirmation when the deal has been placed on there. So for us, hopefully it's definitely a growing platform, and hopefully you can see by the connections when people are connecting and talking to each other via the platform, it's working. So hopefully, thank you very much for your time. I'm happy to discuss anything about ship finance and ILEX thereafter, but I think this is a valuable tool as we go through our digitalization of banking and loan origination and syndication.
So transactional service is an incredibly important thing for ship owners to have. It gives the ship owner a license to operate, and it gives the ship owner a license to trade. And not only that, it obviously gives the ship owner the license to get financing. And very often we are beholden on the loan covenants that the individual ship owners, whether it's a sale leaseback, whether it's a traditional ship financing, whether it's a ship investment fund, they will have requirements on how the insurances should be structured, what security should lie behind. And we as a company have access to all global markets. So how does insurance assist? I've gone a little bit into it. Obviously, we're meeting the lenders and financiers' requirements. From a financier perspective, lenders need to protect themselves. And they do that two different products, which is mortgagees interest insurance and mortgagees interest additional perils. Now, if a ship owner is insured with A+ security and everything is fine, it will be approved by the lenders. But in the event the ship owner itself does something that is outside of scope of cover, something that's actually forbidden to do under the policy, and the policy doesn't respond, the mortgagee's interest insurance will respond. If similar to that, if they do something which then also causes a oil spill, you'll have a pollution, and the P&I club says, well, hey, you've done something that you shouldn't be doing, well then the MAP insurance will come in and cover the lenders for the financial loss that they might have.
We currently have 41 vessels as I speak. We have put on for 2 more, so we'll have 43 by end of the month. So at Leela Global, what we believe is that since we do not have a solution, and solution at least is few years away, it's then it will not be very intelligent to keep getting rid of vessels and keep ordering new ships. So it's better to enhance life of the existing fleet by introducing technology, by of course lowering the emissions which we all have to do in the life of. Our strategy has been fairly straightforward. We acquire vessels priced at opportunistic levels. Like I said, one of our business is recycling. So we have the view of what exactly is going to happen from now, because we do know the seal prices when the recycling has to happen, which actually places us at a very good position in judging what the value of the asset should be. So that is where our strategy has been. On the revenue generation through exploring two markets. So we have, so one, for example, we run the vessel for a while and then we recycle it. Of course, we are conservative borrowers. Our LTV, like, is about less than 30% today, and we intend to continue that. Of course, banks don't help when we have an aging fleet as well, so not everything is available for funding as well. On the financial, institution side, I would say we've been spoiled for choice, thankfully, because of our strategy and our success. We have all kinds of banks who have been funding us. We have Chinese, Japanese. We also have a lot of European banks who are behind. And in fact, we recently had a Greek bank give us funding as well. So our spectrum is pretty wide when it comes to financial institutions.
And we've got very lofty targets for 2050 for net zero, or around 2050. Well, to reach the targets that we want to for decarbonisation, we need approximately $100 billion a year invested by the industry. One of the ways to reach this has been through capital, and people have already spoken about quite a few of the initiatives. There's lots of different types of ways to call green financing, whether it's through ratchet financing, where there is actually an incentive. The better you perform, the better interest rate you get, or the better equity you get in your company as a founder. There's asset-focused financing, which, for example, if you need financing to buy a scrubber, financing for a new build, which is far more efficient. And we've got things like the Poseidon Principle, the Equator Principle, lots of different initiatives set up by a lot of the banks. About half the world's ship finance portfolio is now with banks and financial institutions that are applying the Poseidon Principles. So these initiatives, they're good. And this is where I think there's a real role for financing to kind of take a lead and assist with decarbonisation.
I won't spend too much time on this. I'm sure you're well aware of the Poseidon Principles and who's part of that. It's 34 banks now that have signed on to this. All the Western banks, but also now a number of Japanese banks. Collectively, they represent around 80% of all ship financing, so this is substantial. So then when it comes to shipping, I've got a few examples here of companies that have taken the green financing route. What are the prospects for owners? Well, in essence, the ESG lending has a lower risk profile than conventional lending. So what this does is it opens up to the owners a greater variety and a greater choice of funding for their projects. In addition to that, of course, it gives them favourable loan terms. For the bonds, it's typically 50 base points less interest, so 0.5% less interest. For conventional loans and debt, it's around 10 basis points, around 0.1%. So the owners get more choice, and the owners get more favourable terms on their loans, in addition to the benefits that they have of having a greener vessel in terms of the lower taxation due to the lower carbon emissions. What are the key criteria for these owners to qualify for green financing? It's not just about it being a little bit better than average. The projects, the vessels, they have to be really green. We have some players on the right here who have a foot in the region. Hapag-Lloyd, many of you know. They've had totally 10 projects over the past few years where DNV has also supported them in documenting their footprint. So they've been very successful in this area, and of course they have a foot still in the region. And Densay Shipping, present in Dubai, also in Turkey. I think they have the 4th vessel being delivered now with green financing with very favourable terms, and where DNV has also helped. So it's relevant for this region, and I think increasingly so.
The two hot topics are the 2 Ds, decarbonization and digitalization. And the way I see it, that until the technologies have a chance to mature and evolve, then all we can do is some incremental improvements to improve our efficiency to get on the right trajectory to the ultimate challenge of the 2050 net zero, as recently mandated in the MEPC, the latest MEPC in the IMO.
Well, first of all, I think any asset-based company, I think if you fix your balance sheet, your P&L will follow immediately. So that's why we thought the liability side of the company is the most important thing. And then we looked at the liability, and we started to reduce our exposure in terms of debts and liabilities and increase our shareholding value. By that, we managed in the past 2 years to reduce the liability from 450 million dirhams to below 200, actually, or 200 million dirhams. There's about 40% decrease in liability. We have exited most of the expensive financing facilities that we have, and we refinanced the fleet mid of last year. So we dropped the interest from a 2-digit interest to below 5%, which was a remarkable saving in the P&L. We have taken the decision to keep our financial objectives as clear as possible, looking at a clear capital structure after we've done all this restructuring, and we will be maintaining a net debt to equity below 1 times, and also the maximum net debt to EBITDA will be not beyond 2 times. So we will continue looking into the refinancing opportunities. I think we with 29% leverage, we have a great opportunity to re-leverage the company, and this is going to work out in the favor of the company in terms of releasing a lot of cash flows for the company to expand this year and beyond.
So what we're going to look at are the additional costs involved with applying the fouling release system. So the first cost is the application cost. The shipyard charged $110,000 over and above what they would have charged for the premium anti-fouling, which was the existing system. Then, of course, there's the cost of the paint too. That's $500,000. So there's a total of $612,000 that the ship owner had to pay over and above what they would have paid. Look at the fuel savings. $6.2 million, of course, over the course of 5 years. And if you look at that, as far as the cash flow is concerned, then you obviously minus what you paid for it. And the ship owner had a cash flow of $5.6 million, of course, over a course of 5 years, but with an NPV of $4.652 million. And that's not all. This payback was in 11 months. In 11 months, the ship owner recovered the $612,000 that they paid extra to coat the vessel with a fouling release system. So even if this vessel is kept for 2 years, the ship owner stands to gain for 13 months at least. Okay, we just looked at a 5-year period, but let's look at what happens in a 10-year period. Of course, I'm not going to go row by row, but there is as you can see, the cash flow is almost $10.4 million over the course of 10 years.
So if we focusing on the dry cargo market and we look at how that's affected the sale and purchase prices, you'll see here, over the last 10 or 12 years, we've seen a steady increase in the asset prices, certainly very much in the last few years. And most interestingly, I think on these graphs, if you look at the green line, which is the 5-year-old prices, compared to the red line, which is the new building prices, certainly on the Kamsarmax and the Ultramax, these values are now very, very close together, which highlights the ship owner's desire to have modern eco ships on the water over the new building and the weight that it will take for new building deliveries to come on stream.
It's been a pleasure attending the TMS Ship Finance and Trade Conference, the 6th of its kind. As usual, it comes in a time where the industry is going through a lot of disruption. Of course, with disruption, there are many opportunities, and this is how the industry is actually thriving on. A lot of networking, many of the expertise have shared a lot of views, which are very useful, gave a lot of guidance and thoughts for the audience, and there's a lot of takeaway.
First, I would like to say congratulations, because it's an amazing morning. I get many information about the industry. It's so interesting for us. I feel in my mind, I register many things, but I think only 3 special words. Adapt, promise, and challenge. And I think the industry is ready. The region here is ready. I remember the captain, a man say, over is in the table, and I know is the region is UAE is ready for the future, and I believe the future is incredible for us and for everybody in the industry.